Hello, we're team number 16, and for the Capstone project, we chose to explain the American Express company. What we're going to do is that we're going to analyze the financial statements and the ratios to see if we would advise a friend to invest into the company. The content of the presentation will be: first, the company overview; second, the financial statement analysis; third, the ratio analysis; and fourth, the final conclusions. The team members of this project are Carlota Duran, Hector Caceres, David Miguel, and me, Camila Carrillo. Okay, first we're going to do a company overview of American Express. American Express is a worldwide payment network company in the banking financial service industry, primarily known for its credit cards. The company was founded in 1850 and currently has over 120 million cards in force. Here we can see that 67% of people who use American Express cards are located in the United States, while the other 33% are located outside of the United States. American Express also offers the high-yield saving accounts and travel and lifestyle services. American Express operates in an international market with huge competitors like Visa, MasterCard, and China UnionPay. After these three competitors, American Express is the fourth largest company in the banking financial service industry. In order to sustain their position in the American market, American Express collaborates with multiple commercial partners. These partners boost the platform growth and popularity. American Express' goal is to produce digital services and goods that will enhance the quality of life of their clients. AMEX goals consist of enhancing the customer quality of life, helping businesses and individuals to success worldwide, and building more sustainable, fair communities. AMEX makes use of advanced statistical techniques, machine learning.
Next on, we have the company's news. We're going to talk about three of the main events that happened this last year. First of all, we have the interest rate increase. This has affected negatively Amex and its consumers, as the increase of interest rates has lowered the spending of the consumers. This has led to a tourism decline, also due to the pandemic, because tourism declined as we were in lockdown, and this has harmed Amex as their profits have lowered 39%. And next on, the third event is the BBVA partnership. Amex has partnered with BBVA to implement their cards, and this is going to be a beneficial partnership for both BBVA and American Express, as it's going to help both customers.
Stock market. American Express stock market price has nearly tripled over the last decade, behind MasterCard. Amex has the second largest share price increase in the industry after the initial stock market entry. Above Visa and below MasterCard, Amex has a very good position in the market. Amex has achieved about a 4% increase and overall 21% raise in EPS in the last 3 years. For long-term investing, this is quite attractive. The market forecast is set to increase and expand by a large margin, making investing in Amex more attractive. Now we're going to speak about the financial statements, the three financial statements. First, the balance sheet. For Amex, the balance sheet, we observed a declining trend in the last 3 years concerning increased losses similarly observed in the majority of companies. We see a similar situation in 2021 compared to 2020. We see a decline in the total balance of 2% compared to the decline of 4% observed in the previous year. Over the last 3 years, the decline in current assets and then the rise in non-current assets stand out, predominantly cause the observed decline in the total balance. We can see a very solid stabilization from 2020 to 2021 compared to other companies. American Express does well in adapting to their environment. Compared to the balance in 2019, Amex has experienced a total loss of 5%, which it has to recover in the coming years.
From the income statement, we observe a very significant decrease in sales revenue in 2020 compared to 2019, which is the result of a decrease in consumer demand, predominantly caused by the COVID-19 pandemic. In the income statement, we also observe a relatively high percentage of operating income with respect to sales revenue in 2021. This is the result of the purchase of $3.5 trillion worth of government securities by the Federal Reserve at the end of 2020. The goal of this cash injection was to lower existing levels of inflation. These two events are particularly relevant for AMEX, as the majority of their customers are based in the United States.
Next, we're going to talk about the cash flow. From the cash flow statement, we can observe a very significant difference in net cash from operating activities. We can see a decline of 41% from 2019 to 2020, followed by an increase of 107.5% from 2020 to 2021. The numbers reflect the effect of the pandemic in the company. Using the cash flow statement in combination with the balance sheet, the income statement, we find that AMEX is investing a significant amount of cash in long-term investments such as stocks, bonds, and real estate. We obtain this information by analyzing the repurchase of stock, which increased the PP&E and investment securities, which all decreased, meaning cash was used to increase the treasury stock and the share of equity from 2020 to 2021.
Okay, we're now in the ratio analysis. Here we can see all the ratios that we found, the four categories: profitability, efficiency, liquidity, and solvency. Here in the profitability ratios, we have the ROAS, the ROA, and the ROE, and the gross profit margin. In the ROE, we can see that there was an increase from 2020 to 2021, but still it is below from the industry average. The same thing happened with ROS. It increased from 2020 to 2021, but it's still a little bit below, but it's on average because the difference is not too much. Then now in the efficiency ratios, here we have the accounts receivable ratios and the asset turnover. American Express doesn't have inventory turnover. In the asset turnover, we can see that is really high, so it's quicker in comparison to the industry average ratios. And with the accounts receivable turnover, the same. It's not as high as this one in comparison to the industry, but it's very similar.
Final conclusion. Aiming to deepen our analysis on AMEX's financial situation, we conducted the ratio analysis in order to evaluate the company's level of profitability, efficiency, liquidity, and solvency. We observed that AMEX has improved its performance over the past 3 years in terms of profitability, liquidity, and solvency. In comparison to the banking financial service industry, it shows strong profitability, strong liquidity, and a low level of risk, indicating they are a strong and stable company. However, AMEX is still far behind the industry average in terms of efficiency. AMEX should focus on improving their efficiency by changing their credit policies to receive their accounts receivable quicker, similar to their main competitors in the industry, in order to improve their efficiency. Investment decision. We recommend investing in American Express, as we believe it is a company with a very bright future, as it lays its focus on the changing customer needs and providing these digitally by making use of a variety of information systems. AMEX has also shown great historical returns ever since entering the stock market, being the company in the industry with the second highest increase in the stock market price since the initial stock market entry. From the financial statements, we observed that AMEX is a company that is very well adapted to their environment, as we noticed that the total balance stabilized very well from 2020 to 2021, following the COVID-19 crisis compared to other companies. Furthermore, the solvency ratios have shown that AMEX is a relatively low-risk company in the industry, which is very favorable for investors. And also, AMEX is a very liquid company. This means that the company can easily secure loans and overcome financial challenges, which shows the high stability of the company. This is the end of our presentation. Thank you for your attention.